Crisis, a critical event or point of decision which, if not handled in an operative and timely manner, or if not handled at all, may turn into a disaster or catastrophe. A crisis is any event that is going or is expected to lead to an unstable and dangerous situation affecting an individual, group, community, or whole society. Crises are deemed to be negative changes in the security, economic, political, societal, or environmental affairs, especially when they occur abruptly with little or no warning. More loosely, it is a term meaning testing time or an emergency event. Example of a crisis: financial crisis, a situation in which the supply of money is outpaced by the demand for money. This means that liquidity is quickly evaporated because available money is withdrawn from banks, forcing banks either to sell other investment to make up for the shortfall or to collapse. See also recession. Economic crisis, a situation in which the economy of country experiences a sudden downturn brought on by a financial crisis. An economy facing an economic crisis will most likely experience a falling GDP, a drying up of liquidity, and rising or falling prices due to inflation or deflation. An economic crisis can take the form of recession or a depression, also called real economic crisis. See also collapse, recession, depression. Natural crisis caused by natural events such as earthquakes, volcanic eruptions, storms, hurricanes, tsunamis. Precisely 30 years ago today, on 19th October 1987, stock markets around the world suffered one of their worst days ever, in what became known as Black Monday. After a long-running rally, the crash began in Asia, picked up steam in London, and ultimately ended with Dow Jones Industrial Average down a whopping 22.6% for the day in New York. This was and still remains the worst day in the Dow's history in percent terms. In fact, the crash was so severe that it resulted in a spike in hospital admission. On 19th of October 1987, stock markets around the world plunged. Financial markets suffered huge losses, and the downturn started from Hong Kong and the rest of Asian market and moved to Europe and then United States. The Dow lost 508 points and lost more from 22% of its value. The collapse of the market is due to speculation and trading programs which were used to buy and sell securities. Despite the impact of this crisis on financial market, it was the reason for the fame of a lot of the money industry, especially those who could predict it, such as Martin Swig, who appeared on the TV show Wall Street Week on 16th of October 1987. He declared his displeasure and explained that the crisis will not take so much. Analysis of causes of collapse. Cause 1. Derivative securities. 2. Computer trading. 3. Illiquidity. 4. Trade and budget deficits. 5. Investing in bonds as an attractive alternative. Finally, cause 6. Overvaluation. Stick with your strategy. A well-conceived long-term investment strategy based on the personal investment objectives should provide the confidence for the investors to remain steadfast while everyone else is panicking. Investors who lack a strategy tend to let their emotion guide their decision making. Investors who have said invested in the Standard & Poor's 500 index since 1987 have earned annualized return of 10.13%. Number 2. Buying opportunity. Knowing the market crashes are only temporary, these times should be considered an opportunity to buy stocks or funds. Market crashes are inevitable. 3. Diversification works better on the way up than the way down. There is a lot of research that supports the importance of diversifying as a method to help reduce risk. But when a crash happens, asset classes can behave similarly, and a diversification strategy may